Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. I'm really excited to share this video with you guys today. This has been in the making for quite some time now. I've received so many requests from the community, and I apologize if I have not responded to your messages and so on, but I had to make this video today because everybody's been asking about ETFs and why am I not investing in ETFs and what has happened to the ETFs that we used to talk about and so on. So today that's exactly what we're going to do. We're going to look at 5 ETFs that are Sharia compliant and 1 bonus ETF, and I'll explain what that means in a second. And what we will do inshallah is just talk about what ETFs are. So just sort of give you an overview of and what an ETF is, why it is important, the benefits and the drawbacks and so on. Then I'm going to show you from Sharia compliance side of things how they determine a stock or basically an ETF to be Sharia compliant and so on. Why do they include individual certain stocks in those ETFs? What is excluded? What is included? We've got the whole thing. And then the most important thing is these ETFs, all 5 of them are performing absolutely amazing. Like literally they've done really great job, and now a lot of the companies are out. Companies are doing absolutely amazing, but with these ETFs, the Sharia compliant ETFs, since the beginning of the year have done absolutely amazing job, and some of them are beating the S&P 500, which is very interesting. So let's look at, first of all, talk about what an ETF is. So ETF stands for exchange traded fund. Simply put, an ETF is a fund that holds a basket of assets including stocks and bonds and so on, but in this situation we're only talking about stocks, and it can be traded on any exchange just like a normal stock. And what are some of the benefits is you get diversification, and what I mean by that is some of these ETFs have 200, 300 plus sometimes a couple of thousand individual stocks within an ETF, so you're very much diversified instead of investing in one single company and losing all your money. So for example, I'll give you an example from my portfolio here. If UPS basically ceases to exist today and something happens to the company, I'm losing all of that money. I'm losing basically closer to £7,000, almost £8,000 completely gone. Now, if you invest in an ETF that includes UPS, and UPS is only 2% in that, you're not losing much. And that's one of the best things about investing in an ETF. The cost efficiency is also quite good. The Sharia compliant ones, they've got a long way to go because some of the expense ratios is slightly higher. I'll talk about what expense ratios are in a second, but they cost you a little bit more than the usual Vanguard VOO, which is like 0.02. These companies will charge you 0.5, so 0. Some of them almost 1%, some of them 0.3. Whereas these companies, Vanguard and so on, iShares and so on, will charge you about 0.02 for owning the S&P 500. So they've got a long way to go. The other thing is liquidity. What that means is you can trade just like a normal stock. You can buy them today on your normal brokerage and you can sell them on the same day. So there's no issues with that. In comparison to index funds where you cannot really do that, you have to wait for you put your trade in and then it gets executed at the end of the when the market closes. So that's the basically major difference. By the way, if you haven't pressed that like button, please do so. It genuinely helps the channel. It takes a lot of time and effort to put these videos together, so I would genuinely appreciate if you can do that for us. That would be absolutely amazing. If you haven't joined us at the Patreon account, please do so. It genuinely helps the channel as well. You're sending me your portfolios. I've got 2 more I'm going to do today, and inshallah to get back to some brothers who shared their portfolios with me. And if you haven't done that, do that as soon as you can. Inshallah, I've got a couple of more days that I can inshallah do these type of things inshallah. Then before work starts again, becoming a little bit more hectic again. So with regards to, that's what an ETF is and so on. So now what we're going to talk about some of the things that we normally, as from Sharia compliance side of things, what are we looking for? So we're looking for companies from business activity screening. And I know some of you use Zoya. I have been using Zoya for quite some time, and I'll explain to you why I use it and so on in a second. So from Sharia compliance side of things, the business activity screening looks at basically how much of the company, and I'll show you some examples in a second, how much in terms of revenue side of it, how much of their company's revenue comes from non-Sharia compliant side of things. So it could be the fact that company owns sells couple products that are like literally less than 1% of their entire revenue, and normally what we say is 5% or less is what's acceptable. Anything less than 5% is acceptable. Anything more than that, then the company becomes non-Sharia compliant. So that's business activity screening. Then you've got the financials. You're looking at the interest-bearing debt, interest-bearing securities, and I'll show you some examples in a second. You might be thinking, who comes up with this? It's not me. It's nothing to do with me. The Sharia board members that come up with these the AAOIFI standards that were created by these scholars. These are scholars all around the world, from Pakistan, from Saudi Arabia, for example. Some of them are from Sudan, some of them are Saudi Arabia. You've got in the UAE, Malaysia. So you've got scholars from all around the world who sat down and came up with these these standards that we follow. There are different websites that basically have a slightly different information and so on. I used this one because first time there was a video that I did about 4 years ago, I think. We talked about this and we looked at what the standards show. The standards are simple. You can find them here, the hard copies, and you literally, it's a long pages or whatever, not hard copies. If you wanted the soft copy to read, you can actually get them from here. Okay, so the E1s, so you can read it, you can understand it, whatever. We've done that already. So the reason I'm bringing this up is because I get sometimes, if messages saying, oh, this company is not Sharia compliant on that website. I can't track every website, and I don't know what they use. The ones that I use is the standards from this thing, from here, from these basically scholars, and Zoya that uses that. I don't even take Zoya for face value. I'm not sponsored or anything, by the way. I look at their whatever they say, and then I also do my own research, because it's easy sometimes to calculate these things, and I'll give you a couple of examples. But one of the things that, in fact, we'll come back to expense ratio in a second. When this is basically a information that I got from Wahid website. It's quite straightforward. You can find it anywhere if you want. Anyway, so the company receives income excess of 5% of its total revenue from Sharia prohibited activities is removed from the list. So that's quite basic. So 5% of its revenue, if it comes from non-Sharia compliant, that company cannot be included. And these are the things that we're normally looking for. Companies that's, banks and so on, alcohol, pork related, entertainment, hotels, casinos, gambling, cinemas, pornography, music, tobacco manufacturing or sell, weapons. There's some companies that will have music, for example. Apple, for example, might have got Apple Music, but you then need to look at what percentage of the revenue comes from that. That's the most important thing. A lot of brothers and sisters will jump into conclusion and straight away talk about these things. The next thing is, of course, then looking at the interest-bearing debt, interest-bearing securities, and that's that 33%. And these ulama, scholars came up with this, it's not me. Then you just need to look at that and just watch out basically the trailing last 24 months. Some websites even use basically 36 months instead. And it's important to not just to look at 12 months, because, like, for example, if you look at the right UPS, if you use the current market capitalization, okay, on the market cap, you will notice it becomes non-Sharia compliant, because we use in 12 months. Zoya uses 12 months. But Zoya also has now other sections, other things that they've included. They're including MSCIs and so on, which uses 24 or 36. So you need to look into that. So there's a lot of more science behind it. Not science, but it's quite straightforward. And I hope that makes sense, and I hope you understand this. This is not something that we making it up and so on. And I'm not a scholar, so if you need that, go away and do the research. That out of the way, so you understand why basically how to, for example, do this part. The other things that we need to look at is the expense ratio, because the expense ratio, I'm going to talk about them in a second, in terms of how much these companies charge us every single year. But I just want to show you this. Okay, so the expense ratio for let's have a look For an ETF is basically what you will be paying for the company for maintaining this, for making sure it meets the Sharia compliance side of things. And I get the reason why its expense ratios for these companies slightly more because they have to manage it. But however, it is still expensive in my opinion. So 0.65 is expensive, 0.5 expensive, 0.3 is still expensive. So say for example a company has this, okay, an expense ratio, an ETF has expense ratio of 0.65. and you invest 10,000 US dollars, okay, then if they assumed that it will be 5% return each year, and that fund's operating expense ratio remains the same, it doesn't change at all. So this is how much you will pay in basically year 1, year 2, so year 5, year 10, basically 10. So in 10 years you'll be paying about $800 and basically $10 for owning that ETF, if you like, because your portfolio is growing and that's what you'll be paying. So that's the expense ratio, and it's important for us to know these things because you can't blindly buy these things, not knowing how much you're going to be charged and how much money you're going to lose if you're investing in this. And now we're going to talk about the actual ETFs, and these are 5 ETFs that have done really well this year, plus a bonus one, which I will share with you guys in the end. So all of these company ETFs are Sharia compliant. So the first one is IUSA. So I'm going to do this very quickly because I've realized the video is going to be long otherwise. This is the US version of the iShares ETF. It has a expense ratio of 0.3, currently trading in pence, so £64 if you like. A year to date, the return is 10%. So year to date, the price return, this is not, by the way, the total return, this is just the price. So the stock is up about 10% a year to date, which is really nice. If the market closes right now and if you make 10,000, basically 10% every single year on your money, that's absolutely amazing. Distribution yield is 0.73, which is basically dividend if you like. They pay that semi-annually, and you can pause the video and have a look at the rest and how much in terms of asset under management. We're talking about in the millions. Rebalance, they do that every quarter. And this one thing I like about this thing, because it's very well diversified. So there's 10 different sectors and there's 132 different stocks in there, which is quite nice. So you are very well diversified, and you can buy this, and in your ISA. So ISA, of course, if you live in the UK, if you live in other countries, I think in Europe, I think it is available, but I don't know if you can buy it through your ISA accountants equivalent and so on. Now, in terms of the holdings, this is the bit that I actually don't like much. Okay, the top basically 2 companies here, Tesla and Microsoft, are 24% of this entire thing, which is not fair. And the rest of them are 4%, 3%. I like the fact that it should all be about 4 or 5%. But because it's index market cap weighted, meaning these two are in the almost, I think, in the trillions, whatever, in terms of market cap, they are weighted highly more in the basic, and that's the index that these ETFs track. So this is nothing to do with the basic iShares itself. It's this ETF comes from the MSCI, which is the index, the company that have decided basically they use the market capitalization, which means it'll be weighted more. But 46% comes from this, which is quite nice. 10% is basically what we're focusing on. Excellent companies, all of them are top companies, and there is 132 companies, and 10% is the return for this year. The next one is the Dow Jones Islamic one. This one is currently trades in dollars. 40% when it comes to that 40%, 0.4% when it comes to the expense ratio. It's slightly higher than what we've seen so far, but the return for this year is about 20%, which is basically higher than the S&P 500. The S&P 500, the Dow Jones, and all of these indices is actually is beating all of these indices apart from the Nasdaq 100. So it's quite interesting to see that. And yes, they don't have they're accumulating, which means basically they don't pay any dividends. The 1.1 billion market cap, quarterly rebalance, 10 different sectors. You can buy it through your ISA, 1,497 different companies in there, which is really good. And look at this, Nvidia 9%, Microsoft 7%. I don't mind this. This is actually better. But you've got all the big boys here. Okay, you've got the Amazons, you've got the Apples, Microsoft, the Alphabet, so the Metas, and because this more or less tracks the S&P 500, the performance it should be the same. is actually even better, because of course they've taken out all the garbage companies that sell all the non-Sharia compliant stuff, and maybe that has helped to the overall return for this one. The next one that we're looking at is the SPUS. This one is only available in the US. I wish it was available in the UK as well, because that will give us more options. The expense ratio is slightly high. The year-to-date return 21%, so it's massive. It's up a lot, which is really good. They pay 0.45% when it comes to that dividend yield. I'm not sure the distribution frequency. I think it's monthly according to their website. You can see they pay every single month, so I think it's monthly 1.6 billion in terms of the asset under management monthly when it comes to that rebalance frequency, and 10 basically different sectors, which is quite nice. It's not available in the UK. 213 basically different companies are a part of this ETF. 15% when it comes to Nvidia. Microsoft, we're looking about 12% for Apple, and the rest of them about 5% or less. Again, I really like the fact that that's okay, but again, that's not okay with me. I don't like that. I don't like the fact that, you know, what is that, 37% or whatever, 39% of this is 40%, closer to 40%. It's not good. I don't like that. And so that's one of the things I don't like about that one. The next one that we're looking is the halal one. Okay, so the halal comes from Wahid. Is the file that I was sharing with you guys comes from them. They've got a lot of information in there. As you can see, you can buy it through in the UK. Expense ratio is 0.5. Again, this is the highest that we've seen so far. A year to date, almost 18% up, which is quite nice. They do pay some dividends annually. That's what you will get. I don't know if the UK one pays dividends though, because I just need to check that, because I think it's the US one that pays dividend. The UK one I think is accumulated. I'll check that in some point. Frequency and the rebalance frequency is quarterly. 10 sectors, again 127 share, basically different companies in there. And as you can see, again similar to what we've seen so far, top two are 15% each, and then 6% or less, and then 57% of those companies are basically of this comes from just the top 10. The rest of them basically whatever is left. So again, and I really like this one, but the only issue I have this, and I've always been honest about this one, is the fact that the company itself, I do trust the big boys. iShares is BlackRock and so on, but with this one, I'm not sure who owns it, and I'm not sure how stable the business is, and so forth, so and so. So only time will tell, inshallah. But for now, I'm a little bit skeptical, so that's why I wouldn't add this one to my own portfolios and so on. In comparison to this one here is owned by iShares. iShares is BlackRock. BlackRock is one of the biggest asset investment companies out there. I don't think they're going to go bust anytime soon. Again, another one, the expense ratio is one of the lowest here, to about 12% up, which is nice. Okay, you get 1% dividend yield, semi-annual, so you get paid every May and November, I think. Quarterly rebalance, 10 different sectors, 394 different holdings in there, 14% Microsoft, and then the rest is actually quite small. So again, this one is done really well to give you 12% with passive, investing. And this is one thing I love about these, generally about ETFs, is that sort of a passive investing. You just buy it, hold it, and you don't need to do anything else. Whereas when I've got 26 different companies, and I have to read all the, every time they report something or news, something happens, I have to be aware of it. I have to do these things. Whereas investing in the, these ETFs is probably one of the best things you can do if you are new or if you don't have the time. Those two situations, just do it. I like to basically analyzing stocks and all of that stuff, and eventually I will be moving to ETFs of my entire portfolio, if not probably about 50-60% of it, but I'm not there yet, and I'll explain why I'm not there yet. The final one I want to share with you guys is the bonus one, and the bonus one is not Sharia compliant. Okay, so please do not take my word for it. There's a few companies in there that are basically not great at the moment, and in terms of Sharia compliance side of things, but majority of the companies, in fact, let me just have a quick look on Zoya. I think is Intel and another company that are not Sharia compliant that's inside this ETF. But this one is done absolutely amazing, and I know a lot of the brothers own this one. By the way, if you haven't joined on the Discord, do that because it's free, and there's a lot of brothers who are sharing good practices. I think a lot of the brothers who own this one is done absolutely amazing job of 41%, because of course all of these big boys are up a lot this year. There's only one or two maybe that have not done well. Maybe Texas Instrument, maybe Applied Material has done well as well, but everything else has done absolutely amazing job this year. And I like the fact that it's very well balanced. This is what you expect from an ETF. Sort of that 11%, 10%, 10%, again 8%, 5%. I really like that balance. Okay. And I've considered actually adding this one to my own portfolio instead of actually holding, because I've got ASML, I've got Nvidia, I've got Advanced Macro Devices, I've got Broadcom, Qualcomm. I just sold it recently. Lam Research, I've sold it recently. So it's one of those ETFs where you just buy and basically forget. 41% since the beginning of the year, 25 is different stocks in there. I really like this. I really like this one, but remember, it's not Sharia compliant. The opposite of this, I think, is SMH. What is it called? I think is let me have a quick look. I'm on my phone. SMH, yeah, that's the US version of this, if you are interested to look at it from US perspective. And this is basically the UK version of it. But yeah, it's a great ETF, but that's the bonus one. So that's what I wanted to share with you guys. So the moral of this story is there's a lot of amazing ETFs that are doing a really great job. If you are new to all of this and you just want a passive sort of investing, then the ETF route is probably one of the best. And if you live in the US, this will probably be one of the ones that I would definitely look into. Learn more about the company, just make sure they're a safe company. If you are in the UK, for example, this is my favorite out of the ones that are in the UK. I really like this one as well. I like the fact that it's very stable. It's got some, top companies in there, but at the same time they have the sort of a consumer discretionary sort of a pharmaceutical companies, so it's a little bit more stable, if you like. And what I mean is by this, not higher beta and so on. It's only 35%, very well balanced apart from that just top one. So overall, really good ETFs are out there that if you are interested, that you should look into it. My entire portfolio, I don't have any ETFs yet. I used to have a couple of them. I've sold it because I genuinely don't think I need them right now, potentially in the next few years. But my main concern for all of the ETFs has always been the expense ratio. I know it's not a lot, and alhamdulillah we're paying because of the fact that they actually putting these things together for us, which is quite nice. So eventually I will be moving out of individual stocks into this. 3 reasons that I normally don't basically add to buy ETFs is the fact that some of them have a very similar holding. So if you have 2-3 ETFs, you're overlapping a lot. That's one thing I really don't like. The other thing I don't like is the expense ratio. Like I said, it's getting better, but it needs to get better. And the third thing is, for me, I really need that dividend paid so I can reinvest on my own rather than reinvesting into the ETFs, which is basically accumulating. They do that for you. I want to do that. I want to control that, because I normally, when I get paid by Home Depot, I don't put it back into Home Depot. I buy it, I use it for other companies. For example, Canadian Natural Resources down, so I might buy a few shares with that money. So yeah, that's what I wanted to share with you guys. It's a little bit long video, but the reason is I needed to explain a few things, especially with the Sharia compliance side of things, where we get this information from, and the fact that you can go on these websites and find any of these standards that you're looking for, and of course learn it yourself and just make sure that you understand in what you invest in, why you invest in, and inshallah that will help you in the long run. Anyway, I'm going to stop the video here. If you haven't joined us in the Patreon account, please do so, and like the video, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.